Have you ever felt like there's never enough money left at the end of the month? Or that investing and building wealth seems impossible for someone with a low income? In this video, I'll show you that no matter how much you earn, it's possible to start investing today and take your first step toward financial freedom. You'll discover simple and practical strategies that work, even on a tight budget. Stay with me until the end and learn how to turn a little into a lot and break free from financial struggles. 1. Understand your current financial situation. Before diving into investments, it's essential to fully grasp your current financial standing. This means understanding where your money comes from and where it goes. The first step is to conduct a financial audit. Spend at least 30 days tracking every source of income and expense. You can use mobile apps, spreadsheets, or even a simple notebook to log all transactions, no matter how small. The goal is to get a clear picture of your financial habits. Once you have this data, identify patterns in your spending. Are there subscriptions you're paying for but no longer use? Are you eating out more often than necessary? These are opportunities to cut back. Excessive spending on things like snacks, takeout, or entertainment can often be reduced without significantly impacting your quality of life. Next, take a close look at your debts. High-interest debts, such as credit cards, should be your top priority for repayment, as they can quickly spiral out of control. Low-interest debts, like student or car loans, should be managed responsibly according to the agreed-upon terms. Here's a practical example. Suppose you earn $2,000 per month and currently spend $500 on dining out. If you cut this expense down to $200 by cooking more meals at home, you'll free up $300 monthly. That amount can be redirected toward paying off debts or starting your investment journey. Understanding your financial situation isn't just about numbers. It's about taking control and creating opportunities to grow. 2. Create a realistic budget. A well-thought-out budget is the cornerstone of building wealth. It's not about restricting yourself, but rather about guiding your financial decisions and ensuring your money works for you. A popular and effective budgeting method is the 50/30/20 rule. According to this framework, allocate 50% of your income to essential needs like rent, utilities, transportation, and groceries. Set aside 30% for discretionary spending, things you want but don't necessarily need, such as entertainment, dining out, or shopping. Finally, dedicate 20% to savings and investments. If 20% feels unattainable due to your current financial obligations, start smaller with 5% or 10% and gradually increase as you adjust your spending habits. Regularly reviewing your budget is key to finding additional savings opportunities. Look for recurring expenses, such as your internet or insurance bills, and negotiate for better rates. Many service providers are willing to offer discounts or match competitors' prices to keep your business. Similarly, replace expensive habits with more cost-effective alternatives. For instance, cooking at home instead of dining out can save a significant amount of money over time. Technology can also make budgeting easier and more efficient. Apps like Mint, Inab, You Need a Budget, or Google Sheets help you track expenses, categorize spending, and visualize your financial progress. Creating a budget isn't about deprivation. It's about making intentional choices that align with your financial goals and pave the way for future wealth. 3. Build an emergency fund. An emergency fund is essential for financial security, as it provides a financial cushion during unexpected situations like job loss, medical emergencies, or urgent home repairs. Without an emergency fund, you might be forced to rely on loans or credit cards, which can lead to further financial strain and high-interest debt. The goal is to save between 3 to 6 months' worth of essential living expenses. For example, if your monthly expenses are $1,500, your target should be to save between $4,500 and $9,000. This fund should be kept in a safe, easily accessible account where it can grow while still being available in times of need. A high-yield savings account or a digital bank with automatic returns, such as Ally Bank or Chime, is a good option because they offer higher interest rates than traditional banks, helping your savings grow more quickly. Alternatively, U.S. Treasury I-bonds are a safe investment that can help protect your emergency fund from inflation while still being accessible when you need it. The key to building an emergency fund is consistency. Set aside a fixed amount of money every month, even if it's as little as $20 or $50. By automating this process, you ensure that saving becomes a habit. Over time, you'll slowly build up the necessary cushion to give you peace of mind and avoid financial setbacks caused by unforeseen events. 4. Invest what you can. Investing is a crucial step in building wealth over time, and even small investments can yield significant returns if done consistently. The earlier you start investing, the more you can benefit from compound interest and market growth. To begin investing, choose a reliable platform with low fees, especially if you're a beginner. Platforms like Robinhood, Fidelity, and Vanguard offer easy-to-use tools and resources that cater to new investors. Once you've chosen a platform, it's important to define your investment goals. For short-term goals, up to 2 years, you might want to consider high-yield savings accounts or treasury bonds, which offer relatively low risk and more liquidity. For medium-term goals, 2 to 5 years, index funds or ETFs, exchange-traded funds, can be a great option. These funds invest in a broad market index like the S&P 500 and typically have low management fees. For long-term goals, 5 years or more, investing in stocks or retirement accounts like a Roth IRA can offer the greatest growth potential, though these come with higher risk. Many investment platforms allow you to start with as little as $10 or $50, making it easier for people with limited funds to get started. Treasury bonds, such as U.S. I-bonds, are a good choice for those looking for a safe, inflation-protected investment. Certificates of deposit, CDs, are another option for conservative investors, offering guaranteed returns and FDIC insurance. Index funds and ETFs, such as Vanguard's VOO or Fidelity's FNILCs, are excellent for broad market exposure with minimal fees. The key to successful investing is consistency, not the size of the initial investment. Even if you can only invest $20 per month, the important part is to do so consistently. Over time, these small investments will grow, and your wealth will begin to accumulate. 5. Educate yourself about personal finance. One of the most powerful tools for building wealth is financial literacy. Understanding how money works, how to manage it, and how to make it grow is crucial for long-term financial success. Reading books on personal finance is an excellent place to start. Rich Dad, Poor Dad by Robert Kiyosaki, for example, emphasizes the importance of mindset in wealth building and highlights the difference between working for money and making money work for you. Kiyosaki stresses the significance of investing in assets, such as real estate and businesses, rather than just focusing on earning a paycheck. The Millionaire Next Door by Thomas J. Stanley offers valuable insights into the habits and behaviors of wealthy individuals, showing that accumulating wealth often involves living below your means, saving diligently, and avoiding the temptation of lifestyle inflation. The Intelligent Investor by Benjamin Graham, a timeless classic, introduces the concept of value investing, buying stocks and bonds at prices below their intrinsic value, with the goal of achieving long-term growth. Beyond books, there are numerous free online resources to enhance your financial knowledge. YouTube channels like Graham Stephan, The Financial Diet, and Minority Mindset provide practical advice on managing money, investing, and creating wealth, with content tailored to beginners and those looking to expand their knowledge. Podcasts such as The Dave Ramsey Show and Bigger Pockets Money offer expert advice on budgeting, saving, investing, and building wealth. For those looking for structured learning, platforms like Khan Academy and Coursera offer free courses on personal finance, ranging from basic budgeting to more advanced investing strategies. A great tip is to dedicate at least 15 minutes each day to learning about money management or investments. The more you understand how money works, the better equipped you will be to make informed decisions and avoid common financial pitfalls. 6. Create extra income streams. Relying solely on your primary income can limit your financial growth. Creating additional income streams not only helps you accumulate wealth faster, but also provides a safety net in case of emergencies, such as job loss or unexpected expenses. One of the first steps to generating extra income is identifying your skills or hobbies. Whether you're good at crafting, baking, or have a talent for design, there are many ways to turn your skills into a side business. For example, you could sell handmade products, baked goods, or even secondhand items through platforms like Etsy, eBay, or local marketplaces. If you have expertise in a particular area, offering services such as tutoring, freelance writing, graphic design, or handyman work can be another lucrative option. Online platforms like Fiverr, Upwork, and Etsy make it easy to connect with clients or customers who need your services or products. Another quick way to generate extra income is by participating in the gig economy. You could drive for Uber, deliver for DoorDash, or offer other on-demand services through various apps. While these jobs might not lead to wealth overnight, they can provide consistent additional income, which can be reinvested in your savings or investments. Additionally, starting a small side business like reselling products, offering pet sitting services, or even starting an online store can be a great way to diversify your income sources. The key is to identify opportunities that align with your interests or skills, so it doesn't feel like a chore. One effective strategy is to reinvest part of your side income into further growing your earning potential. For instance, if you're making extra money from freelancing, you could use some of those earnings to buy tools, software, or education that will improve your skills and allow you to charge higher rates or expand your service offerings. Creating extra income streams is not only about making more money. It's about gaining financial freedom and ensuring that you're always moving toward your long-term financial goals. 7. Practice consistency. Building wealth is not something that happens overnight. It requires patience, discipline, and a commitment to long-term goals. One of the most important habits you can develop on your wealth-building journey is consistency. This means making saving and investing a regular part of your life, regardless of the challenges that may arise. Set a fixed amount of money to save or invest each month, and stick to it even when things get tough. This consistency will help you build momentum over time, and you'll find that small, regular contributions can grow significantly, especially when compounded over the years. For instance, if you consistently invest $50 a month into a stock market index fund, you might not see huge returns right away, but over time, that consistent effort will accumulate. The power of compound interest, where the interest earned on your investments generates additional earnings, plays a key role in this growth. The more time your money is invested, the more it has the potential to grow exponentially. While it might be tempting to skip a month of investing or saving when faced with financial hardships, maintaining this consistency is what sets successful investors apart. It is essential to have a plan and stick to it. Even if it feels like progress is slow at first, remember that the key is long-term consistency, not instant results. To ensure you're on track, it's important to review your financial plan regularly, at least every 3 months. Take the time to assess your progress, reflect on any challenges you faced, and make adjustments if needed. Are you saving as much as you intended? Do you need to increase your contributions to keep pace with your goals? By staying disciplined, tracking your progress, and making small tweaks along the way, you'll be on the path to building wealth steadily and effectively. 8. Avoid financial pitfalls. While building wealth requires action and dedication, protecting what you've earned is just as crucial. There are many potential financial pitfalls that can derail your progress, and being aware of them will help you avoid costly mistakes. First and foremost, steer clear of get-rich-quick schemes. These often promise high returns with little risk, but they are usually scams designed to take your money rather than help you build wealth. If something sounds too good to be true, it most likely is. Whether it's a dubious investment opportunity or a high-risk business venture, be wary of anyone offering instant riches with minimal effort. Another major pitfall to avoid is lifestyle inflation. This occurs when your spending increases in direct proportion to your income, leaving you with little to show for the extra money you're making. Just because you get a raise or a bonus doesn't mean you should start spending more. In fact, the more money you make, the more important it becomes to stick to your budget and continue saving and investing. Instead of upgrading your lifestyle, consider saving or investing that extra income to accelerate your wealth-building journey. It's easy to get caught up in the temptation of spending on bigger houses, fancier cars, or extravagant vacations, but those habits can prevent you from accumulating wealth over time. Another critical aspect of avoiding financial pitfalls is conducting thorough research before making any investment decisions. It's essential to ensure that any platform, investment opportunity, or financial product you're considering is legitimate. With the rise of online scams and fraudulent investment schemes, it's easy to get caught in a trap. Always check for reviews, verify credentials, and make sure you understand the risks involved before committing your money. Protecting your wealth is about making smart, informed choices and avoiding the financial temptations that could derail your progress. By staying vigilant, avoiding scams, and keeping your spending in check, you can safeguard your wealth and continue on your path to financial success. Super bonus tip: automate your savings and investments. One of the most effective strategies for building wealth, especially when income is limited, is to automate your savings and investments. This simple yet powerful habit can help you stay disciplined and ensure that you're consistently working toward your financial goals, without relying on willpower or memory. The reality is that life gets busy, and it's easy to forget to save or invest when there are other immediate expenses to handle. By automating the process, you eliminate this issue entirely, making your wealth-building efforts a seamless part of your routine. Automation works by setting up recurring transfers from your checking account to a savings or investment account, ideally timed to coincide with your payday. For example, you can arrange for a small percentage of your income, whether it's $20, $50, or $100, to be automatically transferred into a savings account, an investment account, or even an emergency fund. This pay-yourself-first mentality ensures that you prioritize your future financial stability before spending money on anything else. The beauty of automation lies in its simplicity. Once set up, it requires very little effort on your part. You don't need to think about it or make the decision every month, which can be especially helpful when you're just starting to build wealth. Even though the amounts may seem small, these automated contributions add up over time. Thanks to the power of compound interest, even modest investments can grow significantly. For instance, if you invest $50 a month into a low-cost index fund, and it earns an average return of 7% annually, after 10 years you'll have over $8,000. The longer you keep the money invested, the more powerful compound interest becomes. Another benefit of automation is that it helps you avoid the temptation of lifestyle inflation. As your income grows, it's easy to fall into the trap of spending more on unnecessary items. But if you've already automated your savings and investments, that money is out of sight and out of reach. This reduces the risk of spending it impulsively on things that won't contribute to your long-term wealth. Additionally, many platforms allow you to automate contributions to specific goals, such as retirement savings accounts, like a 401k or IRA, emergency funds, or general investment accounts. You can choose the frequency, weekly, bi-weekly, or monthly, and adjust the amount as your financial situation improves. For those just starting out, don't worry if you can only automate small amounts. The key is consistency. Over time, you can gradually increase the amount you're saving or investing as your income grows. By setting up automation today, you're creating a system that works for you, quietly and steadily building wealth while you focus on other areas of your life. It's one of the easiest ways to ensure that you stay on track, even when life gets busy. So, if you're serious about building wealth and ensuring your financial future, take a few minutes to set up automated transfers today. It's a small change that can make a massive impact on your ability to reach your financial goals and ultimately achieve the financial freedom you're working toward. Building wealth, especially when you're working with limited income, is undoubtedly challenging, but it is far from impossible. The key lies in developing a strategic plan, continuously educating yourself about personal finance, and staying disciplined in your actions. While it may seem overwhelming at first, every small step you take today compounds into significant progress over time. It all begins with understanding where you stand financially and creating a solid foundation through budgeting, saving, and investing, no matter how small the initial amount may seem. It's important to focus on gradual improvement rather than immediate results. The journey toward financial independence isn't about quick fixes or overnight wealth. It's a long-term commitment that requires patience, consistency, and a willingness to adapt to changing circumstances. The choices you make today will shape your financial future, and even small changes can yield big results in the long run. One of the most powerful things you can do is educate yourself about money management, investment strategies, and ways to grow your income. There's a wealth of free resources available, from books to online courses and podcasts, all of which can help you navigate the complexities of personal finance. By investing time in learning, you'll be better equipped to make smart financial decisions and avoid the common pitfalls that often derail those just starting out. Remember, building wealth isn't about how much money you start with. It's about how you manage what you have and how consistently you work toward your goals. Even if your income is low, you can still make a big impact by starting small, sticking to your plan, and making steady progress toward your objectives. And while the process may be slow at times, it's important to remind yourself that the road to financial freedom is a marathon, not a sprint. So, whether you're just beginning your wealth-building journey or have been working on it for a while, know that every step counts. Keep going, stay focused, and remember that achieving financial independence is not just a dream. It's an achievable reality with the right mindset and strategy. If you need more detailed guidance on any specific point, don't hesitate to reach out. I'm here to help you every step of the way.